Hello, RWorld. Welcome back to another episode of RWorldTalk. As promised last week, we are getting into part 2 of our episode with Senator Jason Pizzo that we had to cut short last week because he is such an engaging guest and has a lot of information to share. So without further ado, we are going to get right into our conversation on the MySafeFlorida Home Program, insurance, and affordable housing, which is always a hot topic item. So without further ado, we're going to get right back to Senator Jason Pizzo. Let's get into the MySafeFlorida Home Program. We've had strong building codes, obviously, help to ensure that our homes can withstand the hurricanes and the things that we deal with here in Florida. But Florida's existing housing stock also needs to be hardened. So we've got the legislature recently brought back the MySafeFlorida Home Program. That had run out of money. Thankfully, we've got some more funding, but grant program was first used after the 2004-2005 storms. Excuse me. So this year, some money was even appropriated for a condominium pilot project, which as Realtors thought was a fantastic idea. Can you walk us through the benefits of the program and maybe give us your thoughts regarding whether the legislature would consider pairing the program with a dedicated funding source instead of being dependent on that annual appropriation for 5 to 10 years and then sunsetting it again?
So I'll start with the condo. The MySafeFlorida program, Florida program is wonderful for single family detached homes, for hardening and mitigation, and they actually have a wonderful frequently asked questions section and how you qualify and apply for it. It went available July 1st, and I think it may be fully committed already, which is it's sort of a happy problem because it shows the efficacy, the interest, and we urge people to go ahead and file those applications for eligibility because it kind of works like banks funding in regions. If it's shown to be that popular, then there's shown to be a need and an interest. So when we go back for session, we can say, oh my God, those funds were fully committed within 3 days, within 30 days, whatever, not sort of dragging along. I mean, we had a particular scholarship program a few years ago when I first got into legislature that dedicated allotted $60 million, I think it was, to one particular scholarship program, thinking that there was going to be a huge interest and people campaigned on the idea. And then it turns out there was single digit number of kids who took advantage of it. So we didn't re-up that money for the following year.
Sure.
I think it was like the kids that were bullied program, for in schools, to be able to send them to another school. So selfishly for, my coastal community of condos, the idea of a pilot program for condos is great. I do have a large concern with one of the requirements and components. So it allots up to $175,000 per condo association, up to $1,500 per unit,
okay,
which is great, which is, incredibly welcome. The one infirmity that I think is perhaps may result in being tantamount to a huge difficulty or sort of impasse is it requires 100% agreement of all unit owners.
Okay.
And I don't know, it's like Thanksgiving dinner, you can't get everybody at the table to agree.
So if one unit owner wants to do their windows, then everybody in the entire building needs to take advantage of the program.
So the individual unit owner is not the applicant. The association has to be the applicant. And in fairness or just in reality, the agency is sort of still developing on the way up here. I just checked to see if they've updated the page, because right now it just reads as a splash page that basically says, we don't have these funds from the legislature till July 1st. So we're putting together or crafting what the application process is going to be like. Put your association name and number and email address here, and we'll get back to you. But it's not July. It's after July 1st. So, and I think that'll be my concern is that it was not that it's set up for failure, but again, I think it's maybe a lack of understanding from a lot of my colleagues. I'm not going to say nefariously or in bad faith. It's just, I don't think they realize how hard it is to get 100% of a condo association of 10, 50, or 500 units to all be thumbs up on it.
You can't even get them to agree on the color of the carpet
or the day of the week.
Right.
And I think I will be looking, doesn't have to be under my name. I've learned passing 20 plus bills with other people's names on it 1 or 2 years later with the preferred party, that if you're really a public servant and you want to improve your community and help your community, it's okay if somebody else's name on it. But one of the things I'm going to look to amend, maybe through the bill sponsor who had it, is to fall back on the 100%. I mean, I think 75% is, overwhelmingly good, or 80%,
right,
to be able to agree on it. But, I think the interest is going to be wild. I'll go to a town hall meeting with 300, 400, 500 people, and, we give out the information, and then the website, and, they're on there, and they put their names on.
Well, it goes back to what you had mentioned earlier about the majority of your colleagues are not living or representing places in Florida that have the big condo saturations like we do down here in South Florida. So sometimes you're standing on some of those things.
When we were first talking about condos, the one thing that I appreciated and understood is a lot of my colleagues were like, Jason, let me ask you a question. If you came to me and told me that in my single family home where I live with my wife and my kids, if you told me that the state now requires you to put away X number of dollars or percentage of dollars a month or a year now for my roof and for my windows and other structural issues and paint and all this stuff, and you told me that, and you told me I have to put it away and I can't touch it and I can't get it back, and I likely don't get a real return on any of those dollars, how well do you think that would resonate with us? And I said, awful, absolutely awful. It's taking away your property rights and enjoyment of, So this is different. And so Surfside was the most tragic. I told you so. I proposed that we reduce the number of units that have to have transparency and upload documents for everybody to see. I mean, you can see your credit card statement, you can book travel, you can see everything in your life online, but not your home. And so I wanted to lower the threshold from 150 units, I remember, down to 25. And I was told by experts that it was completely unnecessary. Champlain Towers was 136 units.
Wow.
And so it's a bit of, I guess, tough love, but I let people know that I'm not willing to sacrifice their safety. And so for a generation, next week when I go meet those people at the condo association, I'm going to let them know that unless I'm mistaken from years past, if they're at the 40, 50 cents a square foot for the last 30 years, comparable, right? Like, so maybe it was 35 cents, to present value of those dollars. But if they were artificially suppressing their association fees because these association board members wanted to get reelected, it's not popular to say we should probably save this money and put this money aside, right? Right? Because a lot of those relationships are somewhat adversarial. We should put this money aside just for safekeeping so we can make these repairs and all that stuff. They would not have gotten reelected. And so they artificially suppressed. A lot of condos, Chris, the board members started peeling away aspects and components of coverage on insurance. Just so
I've seen that happen in deals that I was putting together where I said
we wouldn't have to go back and give sticker shock and say, right, why did it go from $1 million to $1.5 million, right? And so they started peeling away coverage to keep the price artificially low. Now it's all come to a head, and yeah, it's a lot more expensive. And it's last week I finally got a physical after many years, and after a couple of bad habits, probably like I like to eat pizza and pasta and all that stuff. The doctor finally got me in her office. She's like, all right, you need to go get this test, this test, this test, and this test, and this test. And yeah, I expected after a few decades of eating and doing whatever I wanted.
That was some deferred maintenance.
Absolutely. Absolutely.
Yeah. But so, it all comes to a head at some point.
It does.
Yeah. Yeah. It's unfortunate. I've uncovered a couple condominiums that had done what you're talking about peeling back their coverages. And it wasn't until you put the deal in front of the lender and the lender gets all the documents back from the HOA and says, wait a minute. What you're doing is illegal. You can't have this low coverage on insurance. You don't even have your building covered. What if there's a storm? What if
you're only covered by like a meteor striking on the Tuesday in March? But it unfortunately in South Florida, it happens with a lot. I had a boat during Irma, and it was slightly larger than the previous one I had. Boys and their toys, we like boats, we like cars.
Yeah.
On my way to a marina because my insurance company is insisting that I bring my boat to a commercial marina to weather the storm. And that's when you actually read your declaration page and take a look at it.
Right.
I called my agent and I said, Rob, I won't give you his last name, but I go, Rob, why does it say I have a 9% deductible? And he's like, that's the coverage that you have. I go, no. The last boat I had at a 3%. And I very explicitly said in an email I have in front of me, it says, keep me the exact same coverage and exact same deductibles and percentages. I want the exact same. And he's like, oh, I go, you didn't read it, did you? And he's like, well, to be honest with you, I didn't. If I priced it at 3%,
your rate would have been too high.
And so
shocked me.
I now have a named storm. I'm en route to go bring it to a marina. And I find out that I have, a third of that protection. I bring it to the marina. It would have been safe at my house. I bring it to the marina. It sinks during Irma. I get lifted up and impaled in a storm surge in Coconut Grove.
Oh no!
And then I said, Rob, call your E&O guy, call your errors and emissions guy, whatever. Guy shows up at my house. He's like, I'm prepared to give you X number of dollars. I go, well, this will be fun getting back in the courtroom, right? And then the next day, they made me whole on that 6% delta, but because I very explicitly said this is what I want, right? So it happens.
Okay. Well, let's get into talking about insurance now. Let's get into insurance. November 2022, legislature had a special session, enacted significant property insurance reforms. So since that time, new property insurance capital has come back to Florida. The citizens' property insurance has depopulated some. Reinsurance capacity, while expensive, is present, and litigation is measurably down. Hopefully, all of those things are correct. Okay. There's some really good signs, but deck pages are still hard to look at, as we're just talking about. So Florida is the number one hurricane risk in the world. We all know that. And it seems that a number of other states are struggling with each of the four indicators that we just mentioned. So were we the canary in the coal mine, so to speak, or can you comment on that?
Sure. So I don't know which one to take first. There is new capital and new formations and interest of what we call dry powder of capital on the sidelines, waiting to sort of come into this market with a more favorable regulatory environment, I would say.
Okay.
And some of that deregulation was really taking away the ability for a homeowner who's filing a claim to recover attorney's fees. And so if you now have the legislature who has passed a bill that says if you have a $10,000 property claim that's denied by your insurance company, you have to go out of pocket ab initio from the beginning to hire a law firm out of your pocket to go recover the $10,000. Whereas before, if you reach that sort of declination period, then you can hire an attorney and they can recover their attorney's fees when they were successful in getting you that original property damage amount that you were seeking.
Okay.
So I'll ask you, do you throw good money after bad? And what I mean by that is if you have a $10,000 property damage claim, are you going to go spend $15,000 on an attorney?
Nope. So
that's effectively the net result is the insurance company knows that they will not be paying those claims because if they decline them, I'm not saying bad faith necessarily. I'm just saying that the propensity is going to be that on the $20,000 and below claims, you're not going to have someone going out of pocket. If somebody needs that $10,000 to fix their property, they probably don't have $10,000, $15,000 sitting on the sidelines also to go pay an attorney to go recover the ticket.
Exactly.
Yeah. Right? But that special session bill also left alone surplus lines. So, I made the comment on the floor. I was like, people's mega yachts and private, Gulfstream jets can actually still, recover attorney's fees, but not the fixed income single family homeowner who has a $10,000 claim.
Right.
I found that to be sort of a little inequitable. So yeah, when you realize, hey, we basically can sign up all of these policies and on these property types, whatever, with these actuarially likely payout amounts on property damage, and we're likely not going to have to pay them as long as we sort of stall. Yeah, of course it's a favorable deregulated environment to come in, but not any of those companies are writing condo policies.
Okay.
So to be clear on that, the citizens thing, the pace of increase of policy to what their and in cash on hand really to what their total exposure was completely out of whack. That ratio was nuts, and if we had a really bad storm or another bad storm event, then it would have been catastrophic. So I bought 2 condos in Sunny Isles, and the only company that would insure me at the time was Citizens. So I have some funny stories about that. I mean, they're all nice people. They mean well. They're doing the best with what basically they were handed, which is both a mandate and a demand. And one of the quirky ideas they thought would make sense in order to depopulate Citizens, like you talk about, was to require flood insurance for condos. Now, flood is not a pipe bursting in my neighbor's wall leaking into mine.
It's rising water.
It's not a shower pan failing in the unit above me, coming down.
Right.
It's not even wind-driven rain. It's floodwater. So if I'm 326 feet above the street, and I'm now required...
We have a really big problem.
I'm not worrying
water
about...
reach your
I'm wondering if my agent's going to answer the phone. I'm wondering if it's like, the ark has buoyant. You know what I mean? Like, it's the end of the world.
Right.
Literally.
Like
Godzilla tsunami kind of thing.
Yeah,
so I was like, this is... And that's when you realize people who don't understand, the reality. They're looking at a two-dimensional map and they go, oh, this would be a good idea. It's in a flood zone. FEMA says this is a flood zone. Yeah, but you're thinking in a two-dimensional sense. I don't disagree with a single-family detached house, 1-2 stories. It's in a flood zone, should have flood insurance, right?
Absolutely.
Not the 15th, and I said this on the floor, 15th, 16th, 17th, 18th floor of a building should not require, and that was going to be $4,100 a pop for every one of my constituents who had Citizens, including me at the time, that you would had to have paid. And so I got
$4,100 per unit going to the insurance company, with the insurance company knowing darn well that they will never have
to pay that. So I got it removed the following regular session, and everyone joked, oh, it's the Pizzo amendment, Pizzo flood amendment. Like, haha, yeah, but that would have been tens of millions of dollars. And then come to find out, I met with the CEO of Citizens in Tallahassee. Great meeting. He's like, no, let's do a follow-up. I go, absolutely, let's do a follow-up in my district. He'd be like, wonderful, twist my arm. I'd love to come down to South Florida. And he was seeing a bunch of other legislators as well. Super nice guy. And his number two is a wonderful, wonderful person, Christy. And he's like, great. He's like, my office hasn't received the address of where we're going to be. So we sent him the address, and I think they realized it was a residential address. So yeah, we're meeting at my condo.
Okay.
So he's like, okay. So Citizen shows up, and April Pizzo makes a really nice lunch and a nice spread, and I have a large property management company there. I have an insurance broker who does a lot of condo business, and some other interested stakeholders, and we all sat around the table, and CEO's like, wow, this is a beautiful place to go. I didn't bring you here to look at the inside, but thank you, because I did all the design and furniture picking.
Okay.
I brought you here to look outside, so some of these folks that are in this business, in this space, that have a huge market share here, of deciding the destiny of the quality of people's lives, so they can literally just point right here, like this canvas, open it right in front of you, and you could see from down to South Beach all the way to Fort Lauderdale from our balcony, right? And they were literally just sort of pointing at buildings, saying, you guys rejected that building. You didn't renew coverage there, or you wouldn't accept coverage there. And it was...
Give them some perspective.
It was incredibly helpful, because they learned it like, there's a common area here, a master association, maybe two separate towers have their own. So I think it was incredibly helpful. But then the best joke was that I asked them, what's the maximum rate that Citizens can charge for an HO6 policy? Because remember, they're capped at $1 million in coverage in Miami-Dade, $700,000 in Broward at the time. But the max coverage for Citizens is $1 million. And I had the max of what, for coverage. And I said, what's the maximum rate? And his number two was like, it's Senator. And she was like, I know where you're going with this. And she's like, it's $28,000. I said, okay. I said, what do I pay Citizens for an HO6 policy if the max is $28,000? And they're like, you pay $36,000.
Well, how does that compute?
And she's like, I looked up your account, and I'm like, can you explain that? And they're like, we can't. I'm like, all right. The irony that, okay, I'm not worried about me. I'm worried about, now take a look back outside again. Thousands of people who have policies with you in condos,
right?
And you're not sure whether or not, forget they're actuarially sound, whether or not they're overpaying, whatever. And then they brought back a list to show, who was over and all that stuff. But Citizens is not sort of just monolithic. They had like 3 separate tiers and divisions. And the reality is, my condo constituents, I think, were for a long time subsidizing non-actuarially sound policies of other communities around the state.
Wow.
Yep.
Okay. So we'll get in now to affordable housing. Florida's population is over 22 million, growing still pretty fast. We've had significant supply and demand issues, and our state's rate of inflation seems to be higher than 49 other states. So as a result, we're no longer a low cost of living state. Purchasing and owning a home is getting more difficult for more people across more income levels. Last year, the legislature passed the Live Local Act, seemingly to incentivize developer capital in an effort to allow more Floridians to live closer to where they work. Is that program working, and what more do you think is needed?
So I think the theory and the components of the bill are wonderful. And they're proven. The efficacy of those ideas have been proven in other states with great success in fostering and developing projects that have multi-economic contingencies within them. I think that adds to the vibrancy of the community. I think it's wonderful. But we are seeing a number of cities and municipalities in Florida that are a little resistant, having a little bit of NIMBY going on. So, and the concern there is that a lot of the cities that are having, not an easy time sort of swallowing even what the concept is, much less an application for it, is that the density that would be necessary to pencil things out. So I'll give you an example. There's a number of cities probably further inland that would be welcoming any kind of development, any kind of activity, right? Sure. Want the job creation, the added population is okay. They have the capacity, they can handle it. The utilities are fine, and they would welcome that. But those are not necessarily the areas where people are desirous to live because it's not close to their professional network or where they're working. And remember, a lot of, especially my district, 20 cities, from Sunny Isles Beach to the south, all the way up to the Palm Beach, Broward County line, all up to Deerfield Beaches, right? Those 20 cities, right. A lot of it's service oriented, right? So for every hotel, for every condo, for every restaurant, for every barbershop, it's to the lifeguard, to the front desk, it's a lot of service.
Yep.
And those people are all coming west to east every day. And then, and then going home. They would like to be closer. And one of the, I think I preside and have the privilege of representing the best Senate district in Florida, bar none. I have ports and airports and beaches. It's wonderful.
You've got a great district.
It's super. It's a great district. Can't wait to get out of bed in the morning, and I don't want to fall asleep so I don't miss anything. So
that's good.
Everybody's coming this way. They would also like to, enjoy some of those amenities and some of that and live in that area. Well, here's the problem. The dirt is incredibly expensive in most of my cities. I mean, prohibitively expensive to contemplate something that's entirely affordable, right? Right. There's just not enough incentive, whether it's, tax credits on the dirt of 9% or on the sticks and bricks of 4%. It just doesn't pencil out.
Right.
Okay. When Champlain Towers collapsed, it was later sold a little over an acre for $120 million. That developer is not contemplating making 40% of it, affordable, right? It's without sort of incentive. However, if you have a piece of property, and this is the way a developer's mind works, is what am I paying per unit? What am I paying per door?
Right.
Buying a property for a hotel, what am I paying per key, right? They call it, key. So if I can get more units, and there's a break point, if I can get more units and greater density for the same price that I'm paying for the property, that's sort of attractive. I mean, there's a tipping point where you're not going to be able to absorb a 2,000 foot tall, 10,000 unit. It's just not going to happen, right? So, nor are you going to be able to do it with traffic. So, some of the communities between where we are right now and Palm Beach down to where I live, don't want it. They just don't want it. They don't want.
You hear a lot of that,
and they think it's going to dilute or discount quality of life, per square foot sale cost and all that stuff. They don't want it. So not that they've engineered, but they've worked very hard to find some sort of protective loophole for them. So we have some cities that had an existing DRI program, which considers a whole entire area. And so there's really no density calculation that they have to be subject to. It's more of an office equivalency kind of idea.
Right.
Otherwise, they're saying, well, we have a CRA, we have this, we have that. But those most desirous places to live, it requires the political will of the municipal town mothers and fathers to know to do the right thing for the future.
Right.
Because if you're buying a piece of property, whether it's Boca, Palm Beach, Fort Lauderdale, even Pompano Beach, and you don't have the ability to have 40% affordable, but to be able to have free market for it to pencil out, right? It's never going to happen with the price.
Yeah, and some of the same people that are saying, "Not my backyard. I've got kids." Well, where are your kids going to live? That but when they're moving out of your house, how are they going to be able to afford to stay near mom and dad, wherever it is that mom and dad live? And people need to think about that and think about the long-term goals of the beautiful state of Florida and what it's going to be like and what kind of quality of life people are going to have here. Because the train certainly doesn't look like it's slowing down or stopping in any fashion. More and more people are moving to the state, and the price of real estate is going to keep going up.
The issue is, and I think you sort of alluded to it, was I lost my dad in 2021, but before that, he had bought a house here in Palm Beach County. And I was like, forget, I'm not paying New Jersey income taxes anymore. I don't have kids in school. My grandkids are all going to their schools. They're fine. What am I doing here, right?
Right.
So bought a place in Florida, established residency because there wasn't an income tax. Now, at that time, when insurance was not ballooned and so crazy, and this is 2020, when labor and materials were less, when inflation was not 9-10% hitting us at a certain time, when interest rates weren't crazy, it took a lot of even unanticipated expenses that you were unsuspecting expenses that you were talking about, right, to really reach a point where it was sort of a wash between what you're incurring in a northeastern state of state income taxes versus, well, I wasn't expecting that I was going to have that fee every year in Florida, right? Moving down here. But especially for middle and lower economic rungs, the tripling of insurance premiums, the high interest rates if you're going to your prospective buyer, it was a perfect storm and compounded all at the same time. Now, yep. I'm incredibly sensitive and sympathetic to a lot of my unit owners who are unsophisticated in the sense that, and we say that about every board. I have neurosurgeons, brain surgeons, airline pilots, people that are amazing at their profession who sit on a board, but they're not professional board members, right? They're not, right. They're just unit owners that haven't.
They don't understand some of these concepts that we're talking about.
They don't understand that this is not their job. It's not their profession. It's sort of in a protective mode, right? It's a general oath, a fiduciary a duty and obligation. And so I'm sympathetic to it that those people who now realize that, we deferred maintenance for 30 years, we now have to pay for some stuff, are doing so in an environment with very high interest rate.
Right. Yeah, that's unfortunate.
But they were not 5 years ago when I first filed the bill. Labor materials were less, insurance was less. So I know it's a perfect storm and all that stuff. But again, it goes back to earlier conversations of on the affordability front, you got to have supply. You have to have supply. So
absolutely,
I am actually in favor of a number of provisions that allow for expediting of some parts of the process as it relates to development. People see a project that that's going up, that's under construction. It's like, wow, that just happened. Yeah, there might have been several years before to get to that point before the show.
Just to break the ground, right? Well, we're going to get to our last question. We asked this of all the guests that we have on the podcast. Every time that I've had an elected official that I've asked this question of, they always sort of juggle around because they don't want to piss off anybody in their district. But we're looking for one Florida gem, a spot that you absolutely love, something that you found about Florida that might be something hidden that maybe we don't know about, whether that be a restaurant, a favorite beach spot, a park, a place to get an ice cream, anything that you love. Give us a little Florida gem.
The meatball salad at Cafe Monterano
okay,
is just really good. It's just really good. There's a little stretch of beach. Golden Beach is not going to be happy about me saying this. There's a little stretch of beach between Sunny Isles and Golden Beach, which just has the single family homes there. That's just beautiful and quiet. And I love dogs. So the dog park at Hallover, which is just south of my district, but used to be my old district, is a great place to bring kids. You can watch boats go in and out of the inlet, which is amazing. And
I didn't even know they had a dog park at Hallover.
Oh, they do. It's and actually bifurcated between dogs under 35 pounds and dogs over 35 pounds. So our latest brood is like 36. So we're like, you can go with the big guys.
Okay.
And I have some wonderful. I have some institutions in my district of places. The Sticky Bun is a great breakfast spot. I have decent pizza in a number of spots.
That's a Florida thing.
I got a Mr. 01 in Aventura. It used to be down in the Design District or Miami Beach, and now I have one. So I have a great spot. I mean, we have everything from, you can get a concert at the Hard Rock, you can get dinner along the shore. We have wonderful hotels, and it's just Yeah, I don't want to piss anybody off. It's just,
Sounds like a great place to live.
it's wonderful. A lot of my colleagues have 3 or 4 cities they represent. I represent 20.
Right.
Because of the concentration and the density. So, yeah, some great spots, great parks, I have good people.
Lucky guy. Well, thanks for being with us. Thank you for all the information. Thank you for being candid with us. And we will see you guys right back here next time on RWorldTalk. Thank you for being with us.
Thanks.